What's going on, YouTube? Here we got gold on a daily. We had a little hammer, um, came back up in this little tight little squeeze now. Came back up, smacked the other end of the pattern. Came back down today, bounced off the 8 and retraced a little bit. So price is getting really tight squeezed in this pattern, and so I would watch anything that come outside of that pattern, and that is a high flying pennant still on a daily, pretty tight. Here's our support. If it breaks down, we also have some support here at 12 because of the gap, as you can see. But we're looking good. Gold is holding its own. I thought it was going to break out last night when no one was watching, but it's very bullish. I mean, and if I back up, you can see the long-term trend line, and it's been outside of it once here. So a long-term trend line from, oh, I can't tell, like July of 14, I think. No, that must be. Hang on. Was that July of 14? So it's got a long way. If it breaks that trend line, that's a multi-year trend line break. That's pretty good. So it's high and tight. I mean, it could do anything it wants, but it looks very bullish. Let's see, monthly. We're still above our trend line on a monthly. Did come down a little bit, but we're right there. And don't mind this line now because it's not keeping. I need to get a new trading system really, but that's not going to happen unless I deposit some money in a bank, right? Here we got silver. Silver is still kind of broke down a little bit today, but it's still above our little retracement bounce. This could take a while. It could just keep going, keep going, keep going, you know, making that right shoulder. But you can see the reverse head and shoulders, and it's bouncing. This has to close on a weekly above this spot, and it's only Tuesday, so anything could happen. But I feel pretty good about a bullish retracement completion of this right shoulder here soon. A little flat top break right around 16. So it bounced right off that 8. So hopefully in the next couple weeks that 8 will come up, and we'll just follow that 8 all the way up. Copper broke its previous high here. So any moment it could just bust out. I don't know. Maybe 215 is the break now. I don't know. But that reverse head and shoulders neckline is broken so far on weekly. So keep an eye on that. I had a question about platinum. A lot of questions about fundamentals. I don't pay attention to fundamentals. I just like I want to go back to a system where we have capital controls. All this debt created is just hurting us. Our living, we're not living as well as we used to. That's for sure. Here's platinum on a weekly. It's trying to bust up over that long-term trend line, and as you can see, it hasn't touched It hasn't touched that line since August of 14. So it broke down August of 14. It hasn't came back up to that point since. So it's consolidating right over the line, which I feel that it's caught between the support and resistance right now. And all you're looking for here is a previous high break. That meeting line right here is probably a good spot. So about 242. Well, it looks good on a weekly. That's I think an AB bottom, a double bottom, AB double bottom. So it's coming off a double bottom on a weekly. That's pretty good. And it's consolidating and kind of corkscrewing right here. And this looks like a stair step on a weekly. If we go to a daily and see how that looks, that little spot there. See how that's a stair stepping all the way down to support, that little reversal bar, and it just bounced up. Anything could happen, and nothing's guaranteed, but you can see on a daily, this trend line break could be very nice. And that's kind of a stair-step consolidation. Looks good. There you go. Monthly, you can see the tweezer bottom, double bottom right here. And then almost a perfect hammer, but it's got a little extension bar there. Last month, not last month, but the month previously, right here. So you got a double bottom and a reversal bar. That break right there was your confirmation of the bottom. So anything above 900, actually it broke in the previous lows here. So anything, where's this one? Anything below this bottom here is bearish. But as long as you stay up, we're on a monthly, we're above the 8. So your next resistance is the next previous lows over here. And just ride the wave. It looks like a double bottom plus a reversal bar confirmation right there at 900. So it looks good. You still have resistance on the way up always, but the major resistances are these two spots here. Might as well do palladium. This thing got knocked down pretty well. I think this is a monthly. Yeah, see, there's a monthly. So it's having it's in a bear market, obviously. It broke down, did a bearish retracement, didn't touch its natural point, so it's double bearish. So then it breaks down and it breaks down. So look for reversal bars on a monthly. If you never know, this could be a bottom, but it needs to break into previous lows. So definitely bearish on palladium monthly. Just looking real quick on a daily. It looks like the daily is breaking up, and we have a higher low and a break here would be nice, but you do have a tweezer top here. So a break above 530 could break into previous lows here. So S&P kind of took off, even though the economy seems to be getting worse and worse. I don't know, the PMI numbers came out and everyone was talking about they've never been so low and whatnot, and out of Chicago. Who knows what's going on? Talking about negative interest rates, this thing is still moving up on its retracement from its lows. It broke down here, came up, retraced, broke down again, and now it's retracing. Our next lower high is at 2000, which is a huge emotional spot on the chart. That's a weekly. Let's just go to a daily. You can see how it broke out. You can see the reverse head and shoulders there and the neckline. It broke. It might as well just go to 2000. But that might be its last stop because you can see the previous lows here. So is it going to break into previous lows at 2000? It's likely to hit 2000 and back off. It could build below or at 2000 and then bust into previous lows, making a previous or another lower high. You can see where the lower high is. It's right at 2000. So are we going to see 2000? Probably. It'll hit 2000 and back off. Now if it doesn't hit 2000 and backs off, then we got a lower low from its trend. So what do I say? That's double bearish. So we'll see what happens. And whatever it is, it's going to happen in the next couple weeks. Crude keeps getting knocked back from this gap line. That's gaps have support and resistance lines. So it's trying to break into previous lows, right? Hit it twice already. Hit it 3 times. Previous lows are here, here, and here from this spot, right? And that gap line is resistance. So anything above 35, we might go higher, but it's gotten knocked back 3 times now. This is a double bottom. What else? Weekly, it's trying to break into previous lows. You can see the 13 is the previous low here. So this could turn into a double top and just back off. I mean, I don't know how much steam it has. I mean, there's huge surpluses and no one seems to know what to do about it. So, and then Iran just came on market too. That could be a reversal bar on a monthly. So you never know what's going to happen. That's a monthly double bottom. It could come down and make another tweezer, tri-tip. But you can see on a monthly, you can always tell a top and a bottom where the extension bars are. The extension bars. So we got 2 extension bars making a tweezer bottom on a monthly. Is that the bottom? I don't know. Could it make another bottom and call it a tri-tip? But those are long extensions, and the moves after the bottom usually go the opposite way of the extensions. So you can always see the tops and bottoms from the extension bars. The dollar still moving. Compared to what? I don't know. But it seems to me that more and more countries are going negative interest rates, trying to prop this thing up. And then the dollar looks good compared to those currencies, making this thing go up. And Japan's negative interest rates did influence the yen dollar ratio, but it was short-lived, obviously, and the dollar just got stronger after the short-lived downfall. But here's the lower high on a daily, right around 99, and there it is again. So it did move back into our previous pattern where it broke down. So we do have a whipsaw, right? That was our previous pattern there. It did break down, but it also broke back up. And now the price is above the weekly 8 and 13. So is it likely to make a lower high? Looks like it. If it breaks out of the lower high, we'll see. But we definitely had we're definitely in a pattern here. So keep an eye on that. So it's only Tuesday. That's all I got. Please like, share, and comment. I hope I answered the platinum question. Like I said, definitely not a professional. I traded for myself for, what, 15 years or so. Traded with some very nice people that taught me a lot about the simple things of trading. You can make this really complicated. Make sure you use longer term charts. Know your trend. Know where you're at on the chart. I would recommend staying away from day trading. It's too hard to figure out the daily moves in a long-term trend. So if you know the trend on the long term, it makes it a lot easier. Like I said, I just use the Fibonacci numbers. If I had a great trading platform, I can use these Fibonacci numbers, the 8, 13, 34 simple moving average, where this on this chart is just an EMA exponential. The 8 and the 13 are exponential, and the longer term here, the 34, is supposed to be an SMA, but that's not capable on this platform. So I know it's confusing when I say, oh, it's an SMA, and then you look up here, it's an EMA. Well, it won't allow me to do that. It's not much different, but the SMA on a longer term chart, the price movement over it is more accurate, I would say. And I love Fibonacci numbers. When I use these EMAs, I use it with the T3s, which is Tim Tilson's extra smooth exponential moving average. And then I put a variable in there with the golden ratio. And these work fine. And don't worry about if you can't find Tim Tilson's moving average. But when you put the golden ratio on, these Fibonacci numbers with an exponential moving average, they were really, really delightful and easy to read charts right away. Not that this is any, it's just extra smooth, so you don't get that jagged stuff. You know, these jagged moves over. It's really smooth, like 6 or 7 times over. But yeah, definitely not a professional. All I'm doing is using the 3 lines and some candlesticks with long-term charts. That's all. The only indicator I would use is volume, which is independent from price. The other indicators are influenced by price. They're attached to it. And the only indicator that I would use other than volume is the OBV, the on-balance volume, with a 21 exponential moving average over the top of it. OBV, I think, is very important. On-balance volume. But as you can tell, I haven't used any indicators. I'm not trying to fool anyone saying, oh yeah, you know, this is simple, because it really isn't. But a lot of us have a lot of passion for it. That's right. And it's a lot of fun. I was addicted. I would spend 16 hours a day reading charts, trying to find the perfect moves. And sometimes it doesn't work out, especially in swing moves when you're stuck in a trade for 6 weeks and you're just waiting for the price to break. Kind of like that example on copper. What a slow, slothy thing that's going on. But, you know, it's been knocked down so hard, I don't think anyone's paying attention to it. I mean, this has been coming down for years. Jeez. And I like copper. I keep all my pre-82 pennies, which are actually copper, before they changed it to alloys. pre-82. Every time I find a copper penny, I put it away. And the same with nickels. I find nickels in my change box and I put them in a jar because nickel is still nickel. The copper pennies are not copper anymore. The quarters are not silver, so on and so forth. But that's about it. Thank you for watching, and get yourself a Bitgold account. I hear that accounts more than doubled in the past year. More than 700,000 people around the world have got a Bitgold account, and it's only been in business for a year. So keep that in mind. As far as I go, I don't put my money into any banks anymore because of some trouble I had with the IRS years ago. And I realized a long time ago that they don't think it's your money. They think it's their money, even though you work for it. So it's a Federal Reserve note. It's a form of debt. That's about it. If you have any questions, let me know, and I'll see you later.